All right, it looks like we've got about a critical mass to get started here. Want to be respectful of everyone's time. We have a couple housekeeping things to cover up front. As always, disclaimers to keep myself and others out of orange pinstripes. So want to welcome everyone here to the latest episode of Vested Interest. I am pleased to be joined today by Dr. Jim Keller, the CEO of ClearSign Technologies. Jim, welcome.
Thank you, Lou, and thank you, everyone. It's good to talk to you all.
Yeah, it's going to be great to provide an update today. As many of you are aware, MDB Capital completed a financing for ClearSign Technologies back in April of this year. So we're going to provide an update on what we thought, the context then, and where the company's been, what they've been up to since then. But before I do that, I do have to cover some necessary disclosures. During the content of this call, we could be and most likely will be making forward-looking statements, both Jim or myself, representing both two publicly traded companies, so MDB Capital Holdings and then ClearSign. We encourage you to go refer to the SEC filings for both of our companies. Look at the latest 10Q and 10K to read the risks and uncertainties that are associated with those. I also have to disclose that I do personally own ClearSign. My family owns ClearSign, the firm owns ClearSign, and as I mentioned, we conducted banking business with ClearSign in the last 12 months. So we have conflicts of interest up to the wazoo. So as a fellow mentor once told me, conflicts of interest are a good thing because they show people where you are interested and where your allegiances lie. So obviously, coming here, full disclosure, with a company that I've followed since its incubation and first coming onto the public markets. I've been involved in various capacities through the years, and as Jim joined the company years ago, was very encouraged by him coming from Calidus Burners. So let me set some context here, and then we'll get right into it. We will have a period of question and answer towards the end of this call. We will use the Q&A function embedded in Zoom. So if you have a question, if you think of it while we're talking right now, please go ahead and just submit it when that question comes to mind in the Q&A function, and that'll give us a way to just manage that more effectively as we get towards the end of this call. So for context, Jim, we help raise, and these investors, when I say we, I mean the we that's collectively here on this call and those that participated, what we thought could be the last bit of capital for the company, that it could get the company line of sight or to break even. Shortly after, the loyalty and support from the ClearSign, the CLIR SPV, also exercised their right to provide the company another $4.3 million. So as we sit today, the company is with about $16 million on the balance sheet. Yep. A little bit of a cash buffer. Just give us, from your perspective, what's happened, broad brushstrokes since April to now, that why investors should be paying attention, most importantly, to CLIR.
It's been a busy year, Lou. Very soon after that raise, we announced the biggest order the company's had of a major refinery down on the Texas Gulf Coast. And importantly, the way our industry works is we work often through intermediaries, engineering companies, and that refiner actually is working the order through a company called Bawalco, who is probably the leading engineering company for refineries in the US. So the amount of contacts that company has is enormous. That type of recognition has just fed through in continuing interest since then. So there's been press releases, there's been orders. We've seen just one actually earlier this week, but behind the scenes, the amount of engagement we've seen from industry, the rate that our inquiries are coming in and our proposals are going out has increased dramatically. Just as a summary on top of that, the product development and the new hydrogen burner project that we've been working on, that is a DOE-funded project, that burner worked out of the box. And to the extent that we've actually been quoting that we got great interest, and just to bring it right up to today, we've had customers, in fact, Kern Energy, one of our frequent customers, was in yesterday looking at that burner, and we have potential partnerships in there looking at that burner today, firing in the Zeeco test facility as we speak. So there's been a lot of development on the sales, a lot of development in the industry. There's been changes with the regulators and the technology. I'm actually really excited about this new hydrogen burner.
No, this is great. For the context, and many investors can probably empathize with this pain. A lot of times you hear management teams suggest what's coming, forecast what's coming, and then it always gets delayed and pushed out. And I'd say in your case, and I encourage everyone here, go to the latest, go to the investor relations press release side, and you'll see, as Jim's laid out, there was a recent order to get into the power generation market. We'll bring that up momentarily, but multiple order flow coming from the beginning of the year, and just it seems like, even if you just read the headlines from the press releases, that it's accelerating. So I do want to spend some time talking about sales. You guys have a unique capital light approach to this that I think is worth diving into, so everyone understands that as you're seeing this excitement build and the momentum, how it can exponentially, in some senses, grow from there. And then I also want to spend some time on the new product lines, right? We're talking about how you're filling the pipeline with new products and you're getting pulled into new markets. So why don't we start with the sales? Just frame it up. I know break even's about 160 burners per year. Can you just refresh everyone's memory? What do you have currently in the pipeline that's in process in terms of total number of burners that you have visibility on? That
working off that number, just talking about the bird in the hand, about what we've got in hand. I've mentioned the 26 order we received right after the capital raise. There's 20 burners that are due to ship to California. This is a project that was going to ship last year. The client delayed it. Those are going to ship out, we expect, later this month. So there's another 20 burners there. I mentioned the recent orders, the horizontal heater orders. There's been 2 of those and a boiler order coming through recently, all in process. And we also have 2 engineering orders for different heaters with Kern Energy. That's a repeat orders to that customer that are in progress as well. So if you total those up, I'm not going to do the exact math in my head, you're somewhere in the region between 50 and 60 burners in process in various stages that we actually have orders for today.
Yeah, so that's, just again, to do the simple math at 100,000 a burner, we're talking 5 to 6 million in pipeline. There's probably, again, correct me if I'm wrong, some engineering services revenue that comes with that, some parts, maybe it's a little bit, maybe
there's substantial startup work that's forecast to go along with installations. There's always the bolt-on and the add-ons. And maybe it's a side loop, but as our business grows, those bolt-ons, the add-ons, and the spare part service and the installation, that part of the business will typically grow. As we get that installed base out, they turn into like cash machines out in the field. Each of those burners needs constant support, not in a bad way, but it is just general maintenance, just like a car. And that will, as time goes on, that will become an increasing portion of our business.
So that's an interesting thread, because I don't think I've ever realized that before, that there is that recurring revenue component. So are you providing the additional parts and engineering services on the just regular maintenance, and then the installers that are pulling you into the customers do the actual work? Or how does that function, that purpose function?
It varies by customers, but I think the simple parts, that there are consumable parts on all burners, right? We're providing equipment that is, part of it is in flame. So that does wear out over time. A refinery shut down on a periodic basis, so it's quite normal to go in, inspect the equipment, and to replace the tires on your car. When you get the chance, if you're going to come into a gas station once every 4 years, you're going to replace the tires when you get in. It's the same with a turnaround, right? You turn around once every 4 years. So it's quite normal to have preventative maintenance, spare parts replacement. Those parts are proprietary to ClearSign. They're our designs. So we will supply those to our customers on a routine basis. And as more burners get out into the field, that will be an increasing customer service, but also revenue stream for ClearSign. As far as the services go, it's often there's a installation inspection component. Sometimes it's preparation before a turnaround. You'll go and look at the equipment and actually advise the customer on what would be appropriate spare parts or wise spare parts to them to install on a precautionary basis when they bring the equipment down as part of their routine shutdowns.
Yeah. So, just as a recap, coming out of the gate, you're at 5 to 6 million, let's call it 10 to 11 million break even roughly. You're well on your way and increasing momentum. I want to talk about the sales channel strategy. And while we do that, I actually want to bring up a website, if I can do this here. I think this is you can correct me, this is the heater company that has brought you into the Texas market, right? The Berwalco.
Yep.
So I want to
part of an international group. There's heater companies in the UK. I think there's one in Singapore. They're a big organization.
Yeah, and what I want to, for the benefit of our listeners, because this is something that's always annoyed me in different investments where you can't actually name the end customers yet. You've been fortunate to be able to name Kern after a period of time because they're a repeat business. I think over time we'll see that happen here too. But As you mentioned, your strategy is not to necessarily be direct sell. You're working through established vendors that are selling into these customers. And if I come down here and look at the clients of one of these of your sales channel partners, it's the very big refiners. I mean, Citgo, Chevron, ExxonMobil, Valero. I think I saw LyondellBasell in there at some point. So these are the types of companies that they're giving and customers they're giving you access to. Is that correct?
Very much. And that really right at the start of the call, when I mentioned that Houston order specifically and Bawalco, it's getting into that league of customers and working with customers like Bawalco that work with those target end users is very, very important to us. It's one single order, but in terms of that milestone and that recognition in the market and the fact that they are de facto endorsing the ClearSign technology and in collaboration with their customer, approving the use and naming that as the best solution for their customer is a really big deal for us.
Yeah, and then the other thing too that's a big deal here is it's pulled into a new market, into Texas, which I want to talk about. But let's go back. So let's use Bawalco. This is not the only company you've been established a relationship with that's pulling you into markets. How many companies like Bawalco are you engaged with to help everyone understand that context?
I mean, there's Bawalco. And we can name some because typically the heater companies are happy to work with. So if you just look at this, I believe this year we've mentioned Tulsa Heater Midstream, which is actually another one of our new horizontally fired burners down on the Texas Gulf Coast. Exotherm was a press release that went out this week. That's the burner going into the power generation industry, which is a new industry for us. Devco was the largest burner we've sold. So all of these right now are unique, but all this year they are new heater manufacturers. But in addition to that, there's companies like our partner California Boiler and Rogue, who are also customer facing. They're providing the service to customers as part of their routine boiler service company, but they're also selling ClearSign products. So as we bring each of these on, they get familiar with the ClearSign technology. They're looking to win orders with their customers. Going with ClearSign, a more efficient solution, gives them an advantage over their customers. So I don't see them as a single order with this company. We're basically establishing a relationship and what we expect to develop into a future sales channel with them effectively being another sales agent for ClearSign, pulling our technology into their projects and delivering to their end user customers.
Right. So it's very much a one relationship to many potential customers in that single relationship. And you're seeing, I want to show and then have you describe it. Again, you mentioned Cal Boiler, Rogue Combustion. A lot of updates that you guys are doing on the projects come through LinkedIn, but I've been impressed to see how active one of your partners is on just promoting the relationship, because you're saying that your technology is giving them a differentiator to offer a product that they can't otherwise offer to their customers. So I encourage people to go to Rogue Combustion. Here's what I think is probably one of the most shining example is they're saying, never need an SCR again, because they have they're a burner system with ClearSign's technology embedded in it. And if you go through their LinkedIn profile here, they're talking about the day that they're at the boiler conference, some actual installations with the near zero burner that they're using with ClearSign. I mean, it's really it's almost as if this was your marketing arm, but this is actually an independent company. So is this typical of the relationship you're seeing? Is this where you see these relationships going from a sales standpoint? Help us understand that.
Rogue is a little different to a typical heater OEM. That Rogue is a subsidiary of California Boiler, one of our boiler burner partner. So Rogue is set up to provide what they're calling the Rogue burner with the ClearSign core embedded in the Rogue burner. But in that same vein, the heater companies we're working with, as that relationship develops, I envision the possibility where they're selling a low NOx heater with a ClearSign core burner embedded inside their low NOx heater as part of that package. And we have had conversations along those lines with some of these new heater companies that we've got relationships with.
And then help us understand too. So you've got about a half dozen or so of these relationships. Is there, I think of them as similar to HVAC installation companies, right? They're going, you have a problem with your HVAC system, you call a service provider, they have products that they can offer, they cover a certain geographic region. Is there hundreds of these service providers? Is there, a concentration in 20 of them domestically? What does that look like in terms of potential future relationships?
Round numbers, at least in the Western world, there's probably a dozen mainstream heater manufacturers. So those companies they're big, sophisticated companies with engineering. They will manufacture heaters and supply them to a customer, and they will also do engineering studies to modify or to update heaters in the customer's field, which often include reburning, especially if the project is for an emissions reduction, which is great for us. Fuel gas change, use of the heater change, those companies will get involved in the engineering for those. And then they will then pull through the equipment they need. So they will buy burners, they might buy pumps or valves or viewports, whatever it is they need. They will buy those components in to include in their projects that they are then providing to the end user customer.
Okay. So it's really, there's not ever a real, given the way the established channels you have already, there's not a reason for you ever to need, and I think some people worry as you talk about ramping sales to break even, add a ton of sales overhead, right? You're not going to add personnel, 10 sales agents directly for the company.
I mean, there's obviously a balance. You need the salespeople to keep up with the heater vendors and with agents and with your partners, but you very much leverage the resources that we have through the marketing we do to the likes of the heater companies, building our reputation with the heater companies, and the same with the end user refiners, because if you just pick any of those off the bottom of that Bewalco list, they're global companies. They have typically subject matter experts, or a few of them, and as you get to know those people, they're involved in and overseeing the engineering of projects across the whole fleet of refineries for those clients. So it is an industry. If you set your strategy correctly, you can really leverage an efficient sales team and have very great reach.
Yeah. So let's pivot a little bit, but on that same vein of leveraging a resource for maximum impact, you're doing it on the sales side. I think that's coming through. But what I'm impressed by as well is you're doing it on the product side. What many people might not understand is when you came on, ClearSign had a lot of projects, products, experiments going in a lot of different directions. And one of the first things you did on the job was really rationalize that product lineup and reduce it down to 2 product lines. Doing that, you've successfully got traction, increasing traction. But now, based upon some of the new orders we're seeing, it seems like those products are now being leveraged through the relationships to develop new products. Can you talk to us about that, the newest products that you're developing, how those came about, and then what those end markets could look like?
Yes, and there's product development is always probably call it a roadmap, but it's always an ongoing process. But I think in the last few months since our engagement, the one you'll have seen is the recent orders for the horizontal process heaters. That burner is a blend of simply our boiler burner put into a unique type of process heater with some fairly simple modifications. It was a very good solution that led to our first installation down in Texas and has really taken off. We seem to have hit a gap in the market. There seems to be a need. And of the product lines, this is a fairly simple piece of equipment on the customer side, and these projects are turning quite quickly. And that's why you've seen, recently the order we placed with Devco, obviously the order we're told in the midstream I've referred to, and then recently the order with Exotherm, and there's more in the pipe. But I think here we found it's a fairly simple technology. The orders are single burners, but it definitely seems to have found an area of the market where there is a great need.
And then how big could those be? So, Oklahoma was a power generation. The Devco was midstream, a burner there. Like what are these markets in terms of size and potential for you in terms of volumes, even early stage? I mean, again, generalizations are just to give people an understanding.
I mean, my ballpark estimate of this simple type of heater with the technology we have today, there are, we're probably looking at 30 to 50 year is probably a market size. It's right. You're not going to win all those in your first year out there. But as we look at the goal for break even and then the future growth, right, you don't do that all with one product. You build that in a suite of products. So that fills a portion of that need, but it also gets ClearSign out there. It gets us involved with these new companies. It gets that equipment. Some of the equipment that are buying these simple heaters are companies like Chevron. Mm. I'm not naming them as a client, but just as an example, or their peers. But those companies use these simple heaters. It's a very effective way to get our first equipment into
right.
refineries. So I'm really seeing as there being a lot of value to that simple new market segment beyond simply the sales revenue that we'll get from these initial orders.
Yeah, so it's very much a land and expand, some of these new product lines, even if it's a simple, quick turnaround. But this, I mean, am I wrong in saying, and we've got a question here that's asking along these lines, this horizontal fired burners, it's been a short period of time that it was developed. It hasn't been something that has been years. It was, you got a request for it. Yeah, we think we could do it. And we did it. And now we're getting orders for additional ones.
That's right. And it was, you like the easy wins. This was a very simple modification, right. Realizing the value and the flexibility we've got in our boiler burner product line with some simple modifications to make it suitable for these horizontally fired process heaters. It's to us, from an engineering perspective, it was an obvious, yes, we can do that. It was something we could talk to our clients and have them understand how this would work and how we can use our boiler burner experience to give them confidence that this product will work in their heaters at the point they're willing to very quickly run with it.
Yeah, no, I mean, it's a good one. I also want to talk, it seems like from the outsider's perspective, the same thing is happening with the hydrogen burner. So you had previously been conducting work to burn at a higher mix of hydrogen than the DOE funding to do it 100%. Now, earlier comments saying you got significant interest from that. How big is that market? And am I incorrect in understanding that's really a decarbonization initiative as well, right? If we're using hydrogen, we're not using carbon. If we're improving efficiency, it's reducing carbon. So how fast is that market heating up for you? No pun intended.
Actually, very quickly. It's a really interesting market with the push to decarbonize. A big part of that from the refinery's perspective is, right, if you can make green hydrogen and burn that, it's a green fuel. So the more hydrogen that can get pushed out into refineries, the greener their operation. From the flame chemistry, as you put hydrogen into the mix, though, it puts the flame temperature up, which increases the NOx emissions. So when you've got a
right, that's one of the levers. So what the determinants of NOx, right? It's flame temperature. And then there's what's some of the flame shape? I mean, what's some of the main levers that control it?
Flame temperature and the oxygen level within the flame. But flame temperature is the key. If you only think about flame temperature, you've got 80%. Right, you've got the important component there. So most of what we do is focused on flame temperature from a engineering perspective. Hydrogen burns very quickly. It burns very intensely. It puts the NOx levels up. For everyone operating a plant under their NOx permit, as they have to do, when you're looking to the future and you want to burn hydrogen because there's pressure to do so, it's going to put your NOx levels up. So somehow you have to come up with a strategy to maintain your NOx levels. So you think back last year, I think it was, we announced on top of the DOE grant to develop that burner, we have a commitment from Southern California Gas Company to basically sponsor us with $500,000 to promote ClearSign hydrogen burner technology into their customer base. Their interest is the Angeles link and promoting hydrogen to their customers, but they can't do that if their customers don't have equipment ready to burn that hydrogen. Right. So as part of them developing their hydrogen project, they're sponsoring our equipment and wanting to promote that into their client base so that their client base is ready to receive hydrogen. But it's like
this is a product that could adjust as the market adjusts, as the fuel mix adjusts. So if it goes a portion of hydrogen to full hydrogen, this product will be forward compatible.
And that is key, right? Because it's really a big chicken and egg conundrum. If you develop equipment that's only good for hydrogen, you can't use it until you've got hydrogen. Well, you can't get hydrogen until you've got the equipment in. So what our burner does, it runs from 100% natural gas. So it runs with the fuel gas the refiners have got today. It makes the ClearSign NOx level, so it fixes that problem. And it's there and ready. So as you get to increase your hydrogen, or if you fluctuate up and down on the hydrogen, that burner's ready for it. At that point, as if you don't know when the hydrogen's coming, you're still ready for it, right? You can check that box. You don't worry about it anymore. So if you're replacing your burners to meet NOx levels, you've got to replace your burners. That's like, this is the obvious choice. You've set yourself up for the future. You're meeting your NOx levels, and you're ready for the hydrogen. And that has been a very powerful driver.
Yeah. I think too, I want to talk a little bit about, because one of the other things I appreciate about you is you've been very methodical and systematic about setting up the company for success, the product line, generating those initial sales. But then in recent discussions, we started talking about, yeah, we have a line of sight on break even, but that's not what I'm just here for. It's about building a sustainable, growing company and creating those future growth opportunities. So how do you see that? What are you doing now to create the pipeline, fill the pipeline 2 and 3 years out as you execute on stuff that's right in front of you?
I mean, for nuts and bolts, there's yours. There's your organic growth of what you've got. And I've said really since I joined the company, getting equipment out in the field, building up that customer base, so clients have install base to look at, is one of the key things we have to do. The more equipment we get out there, the more established we are. And at some point, people just start looking at the math and say, okay, we've got ClearSign, or we can pay 5 times as much to put in an SCR. And if they're not discounting our price because of the risk, because now they're familiar with it, how could you make a different decision? Right? At the moment, we're new tech, so we've got together install base. That's just the nuts and bolts. Right? Just taking recent examples to put some a bit more tangible. We put it on LinkedIn. We ran a big demonstration at Zeeco of our burner technology earlier this month. I think it was the second week of the month. Right, we had clients coming in from major refineries, the major EPCs and engineering companies. We got to present the standard ClearSign burner, but we also had a lot of data, and we couldn't fire it, but we had on show the hydrogen burner. As a result of that conversation, right, we have companies that make ethylene and companies with different process units coming to us saying, hey, we need this burner. Can you develop it for our technology? So expanding the market. So when you're asking, now these are big projects in our industry. They're not things you knock out in 3 months, right? And there's a lot of money involved. You've got to get financed. So I'm not trying to give anyone the impression that we're walking out into a huge, great market tomorrow, but to give an idea of how I'm looking at the company 3 years and beyond break even and the growth opportunities, even without going out to other very different markets. Just getting into those new technologies changes the segment of the market that we can go after. And there are some massive markets out there that we haven't even factored into our marketing right now because we don't have the technology. But now what you want to do is to get customers bought into those projects and develop that new technology with them. And we're starting to see that interest. So if we're looking beyond the 2 or 3 year horizon, developing that technology with those client partners is a big part of that growing long-term plan. You're not going to see sales. And I don't want to give anyone the impression that you're going to see sales in these new markets in the next 2 years. But if you're wondering what we're doing behind the scenes, absolutely, you have to be planning for that.
Yeah. Well, let's talk about too, how are changing regulatory landscapes helping build your pipeline as well? So as a refresher, you got earlier in the year, you got BAC designation in California. You didn't need that to get installations. You were already getting traction in that market. But I do believe in the last quarterly conference call, you mentioned that you're having discussions with Texas regulators, the Colorado regulators, and they, interestingly enough, just got their hands slapped for being now, they moved up the next level of being pollutants in terms of the EPA's eyes. So they have a increased focus on what they're doing to control NOx. And how's that impacting ClearSign?
Yeah, and it manifests in different ways, but it starts with ozone and the EPA basically going to these different regions saying, hey, you're in an increasing level of severity for ozone, putting pressure on you, have to update your regulations. We actually went to meet with the regulators in Colorado just a few weeks ago because them and the governor of Colorado, Governor Polish, actually wrote a letter to their regulator saying, you have to deal with this and here's the goals you need to get on it, which was public, which gave us the opportunity to go and talk to them and say, hey, we can help with this. How do we talk to your customer base? How do we help you frame your regulations? You mentioned the BAC designation, being able to refer to that because they understand what that means. That gives us credibility when we're talking with it. We're no longer just a hot shot coming in off the street. We've actually got some credentials behind us. The Texas regulators are the same. They've been the severity of non-attainment in Texas has been increased, which is now leading them to develop their regulations. It takes time to get the regulations to work through the process, but all the industry in those areas, they know that it's coming. So as they get projects or new permits are being issued, they're forward-looking because they know they need to be compliant in the future. So you start to see the effect of paying attention. They start including us in the scoping for their projects because those projects might be coming through in the timeline you mentioned. They might be coming through in 2 to 3 years' time, but you have to be laying the groundwork for those projects now. And the expected change in regulations coming from these initiatives from the EPA and the incentives are driving that interest and letting us get in the door, right? And to get a lot more traction in these new regions.
So before we get to questions, because I think we've got some good ones here, and I think it'll spurn a few other threads of conversation, I did want to give you a chance. Balance sheet right now, as I mentioned in the intro, you're about $16 million to end the last quarter. It's an update. It's been since offering. Are you still confident your online site of break even? Has it improved? You more confidence? Just does this get you to burning about $1.5 million, which is pretty soon. You've done a job to burn dollars, but do you still have the same expectations?
Yeah, we're seeing, Lou, we've talked about the hydrogen burner and the interest, rather quick uptake of that one new product line. It does take a lot of time for customer inquiries to go through to me in this industry. So what I can watch on a daily basis, I'm looking at is for inquiries and just the number of proposals that we're putting out there. Those are not orders. It's a pretty good measure of industry CLIR. And round numbers right now to where it was at the start, up about 3-fold.
Oh, okay.
I know from the very press releases, orders we've got, don't say, hey, look, that's not something you can put out. But a conversation like this, we can put a bit of color to it, understanding people who money in ClearSign, and this is of great interest. That's the key metric I'm looking at, is just the inquiries that are going there. A significant uptick with possible partners asking to come and witness and come in, having said that has to, and say, hey, can you want to see hydrogen? That is not that.
Look, the old ClearSign is some of us long-bringing shareholders are people know against you. Your predecessors would talk orders before they were even yet. So we can appreciate that being announcements in hand happening. But it sounds like you're getting tangible, getting positive feedback and a network effect from different sales channels, from the demonstrations you're doing. So that's an encouraging sign.
Yes. I'm bullish.
Yeah, no, it's good. Look, I want to stress too, I think maybe some people don't understand. You're not just a approved CEO comes in a turnaround situation. For lack of a better explanation, you were born to do this. I mean, your graduate studies were actually in flame dynamics and NOx formation. So this is something you've lived, breathed, built $100 million plus business with Calidus at, right? Like that's not incorrect.
I kind of worked off the dirt. Yeah, I worked off the dirt. My doctorate's in flame chemistry in NOx, right when NOx was first a thing over in the UK. That was working on power station burners. I worked my way up through field service, working on customer sites, through sales, through project management, and just gradually evolved as my career developed up to running Calidus, and then here we are today.
Yeah. No, and I think that's important. I bring that up again to remind people that you could have stayed in a comfortable position with a big international manufacturer of burners, but you selected ClearSign because of the technology. In all your decades of doing this, if I, again, paraphrasing the last time we spoke, this was something different, unique. You've not seen anything like it, and now that's being borne out in actual sales traction. So that's,
ClearSign's unique. The technology is one of the very rare circumstances, especially in an industry like this, that you truly find something that is uniquely different. And And to me, maybe it's my personality, but it was just a great fit. I just going for the opportunity, having something unique. We've got to prove we can do this. We know we're in there for the fight.
Yeah, no, that's good. And I think it's good for shareholders to hear that. So I'm going to open the floor up to question and answer. I've got one for myself that I'll start with as everyone kind of populates here. So again, please just use the Q&A function in Zoom. You can enter the questions. We'll do our best to get to them all. But I wanted to ask a timely one, and you know you're not supposed to talk about religion or politics with among friends, but what I get asked about it weekly in the markets, even though it's an investing focus for myself. How does or does not whoever wins the White House impact your business?
I mean, I think it'd be disingenuous to say that it wouldn't affect it at all. I mean, obviously we are predominantly regulation driven, but I would temper that with, you know, I've been in this industry a long time. I've been through a lot of different governments and policies, and the speed that regulations move and the speed that the industry moves it's a lot more steady than the ins and outs of the tides of politics. So yes, it's going to have an influence, but typically that influence might be projects get delayed by a bit or advanced by a bit. But it's based on my experience, I do not expect, global warming is not going away. You might delay acting on it for a while or accelerate acting, or fund it with something like the IRA bill, accelerate the work. But in the longer term, the time horizons and the strategic horizons that we're working to, it's in the long term, I don't see it making much difference. But as I said, I'm not going to sit here and say it's not going to have any effect over the next 2 years. If you delay projects or speed them up, that will certainly have some impact, but it's not black and white.
Yeah, no, that's good to hear. I didn't think so. I think what we've seen, through this company's worked through multiple administrations of differing parties and still has gotten traction. And you've seen the regulatory just move over to support it. So, all right. So let me get to some questions here. I do have a couple. Any tangible China update? And again, obviously, people, please understand we're trying to avoid materiality. So I wouldn't expect Jim to provide an update that he hasn't provided on a call that's material. So any general context there in terms of China and the progress there?
I mean, I point to everyone for the last few calls. We've referenced delays in China. We do have project. It's been slow. So developments in China I don't have any really significant update on China at this time.
No, and I think we talked about it too. China for any business can be a blessing and a curse, right? Huge end markets, but at the same time, there's also worries about theft of IP. And I think you've done an admirable job over the quarters of saying like, hey, this is there, it's a potential, but it's not necessary for you to do what you intend to do in terms of get the break even and grow those markets. It would be a nice option and a great win when it comes to fruition.
Yeah, Lou, and also, you mentioned we looked at the product portfolio right as I've been in the company. We have we've got to get to break even with the money we've got. That is goal number one. Yeah, and I'm going to make sure we spend that money wisely.
Yeah, I think that's the right approach. All right, so let me go through a couple other questions here. How important will acquisitions be in your growth, or is there what's your market penetration in selected sectors or other sectors you think you can get into through acquisitions?
Yeah, I think as time goes on, and especially into the longer time horizon, probably past that break-even time frame we're talking about, I expect acquisitions to play a significant role in the growth of the company. Saying that, we don't have any targets right now. There's no one that we're talking to. But for my mindset, the organic growth and what we can do over the next couple of years, we've got to get to break even. I think what we've got in house is what we'll do that with, because that's what's going to turn in that time frame. But beyond that, my ambitions are bigger than that.
Yeah. Oh, that's good context. Another one here. How was the boiler burner event in California with the report? Did they release I think that was one where they were going to release efficiency results that tied into the decarbonization.
Yeah. And whoever brought that up, I'm glad you did. We've had 2 significant product demonstrations this month. Right. I've touched on the process burner demonstration we ran at Zico. That was a really big event. Getting end user refiner clients to take that time out of their schedule, flying to Tulsa to come just for the only purpose of getting to know ClearSign technology and seeing it for themselves and getting to talk to us about how it can work with them is a really big deal. And the feedback from that has been ongoing since then. The California demonstration is actually part of another outside investment we've had from the California GET program. This is funded by the utilities and was undertaken to measure the efficiency of ClearSign burners compared to other standard burners in the market. Right, so that testing was done by third-party engineers contracted by the GET program, not by us. The data was taken by them. The report was written by them. We're waiting for that to be issued. I can't tell you what the results are, but I'm eagerly waiting for that report to come out.
Yeah.
But the demonstration was coordinated by the GET program. They did the marketing for it, and they pulled the clients. We had, well, there was over 70 attendees registered. I think at least 60 of those came in for the event. They covered customers. They covered regulators. In fact, some of the global refiners that were in Tulsa for our demonstration day with Zeco, they were out there in the California program too. So that was a
very big visibility for ClearSign.
Very successful demonstration. And then you showed the Rogue site. That was done at the California Boiler, right? The parent company of Rogue. That was actually done in their facility in San Antonio. So that Rogue organization, California Boiler, and the ClearSign marketing group and our engineers were out there hosting customers and working with them, along with the engineers from the program and Southern California Gas, all there at that demonstration.
Yeah, and if you go, I think Rogue actually has a time-lapse video of that day where you can see the amount of activity buzzing around. So I think it's interesting to know that who those random bodies moving around were actually, key executives, regulators, and they came in for that event. I have
just
go ahead.
Just we're talking about that for everyone. If you all these updates on LinkedIn, we push that information out on LinkedIn as well. It gives the ability just to put photos and some color updates that are not really press release worthy sometimes. But if you're looking for color and introductions to partners and links and commentary, I would really encourage you to follow ClearSign. Certainly follow California Boiler and Rogue on LinkedIn.
Yeah. And I think you're saying this, we had this discussion too. This is actually turning into generating sales for you too. You're getting inbound solicitations based upon the information that you and Rogue are providing on LinkedIn. So I think it's as shareholders understand, it's a purpose there to generate more business, which is working, unlike most social media effort for many companies. And then it's also to inform.
And then multiplying from that, some of the attraction we get are actually engineering companies and consulting companies that are looking to incorporate ClearSign in the solutions they offer to customers. So again, there's multiple effects that are starting. I think we're starting to get to the point that we're actually getting traction, credibility with companies like this, and they're asking us for information. They're asking us to give demonstrations to them so they understand what we can do, so they can help us.
Yeah. So I know you run a tight budget, but whoever's running the marketing, investor relations, and social media strategy needs a high five and a raise.
High fives.
See, I knew it. He's a science engineer first. I got an observation and question embedded here about basically that major oil companies involved with ClearSign's products as potential customers would be a big endorsement of the company tech. But you can't name customer names, but is it fair to say that you're already working with some large company? I mean, I know Exxon was publicized because of previous engineering you've done with them, but is it safe to assume you're working with household name oil companies?
Yes. Yeah, no doubt. No, if we could tell you the names, they are right. Yeah, you drive past them on the street every day when you're filling a car. You know those names.
Yeah. Okay.
But we can't. As you say, they are very protective and very cautious about letting their names be used.
Yeah. And then let me ask, there's been a couple questions here about the hydrogen burners, right? I think there's a lot of enthusiasm around that, but are you getting pulled into the market? Are some of the oil companies saying that they want this already? I mean, it's still early, so I want to couch this question with that. This is just the newest development, but where do you see that as, and how big could that market be?
So the market is the refining market. So in some regards, it will be cannibalization of our existing burner. But I don't really take that as a negative, because this burner, the way this burner works and the ability to even combine it with some other technologies and what it can do with the hydrogen fuels, it opens a lot more market to us. Back to my comments about attendees or chemistry runners, so see that burner then going back to us and asking us how to get this burner into they want users to have a burner for them. Perhaps in the industry, they can ask them to look with them, at least a conversation about how we can have technology. What does that program look like? Is that a yeah? This has a lot of interest, getting a lot of requests and attention. Even just the data will look at LinkedIn posts and the responses and the action it gets. The first post we put showing the performance of the hydrogen burner with, I think it was got the animal photograph of him, has by far got questions or asking the industry comments that we've seen. That is getting a lot of attention.
Yeah, so should accelerate. Let's. There's a couple questions here in terms of our sector, how they are. There's a lot of some of it. So, but I'll try and put it in context. I know not long ago, maybe 5-7 years ago, ClearSign, maybe shorter than that, had done a study of what the serviceable addressable market was, how it could be, and I'm asking this question I want to put up is, how do you think markets you're trying to penetrate right now, and maybe some of the atoms that you're getting into? Again, understanding is an estimate, because for the investor understand, you're trying to do about $6 million in revenue to get to break even. Is that require you to 80% of that market, or is it more?
Yeah, that, I mean, round numbers is the, it's over time frame as well, because the way we have to look at it, especially with this being in the retrofit business, is right of equipment out there, and then the amount going to be changed out in the next few years to meet with cost compliance. So what we're expecting, well, we're looking at about a 15% run rate. Eventually, all of the equipment changed out is what looking at any of these new market segments that were not considered in the original.
Yeah. People, I would guide people to go to the latest corporate deck. I think it has some of the slides that we talked about when we were doing the offering in terms of market size, how customers. I think it puts some framework around that. That is, you're trying to dominate these sectors overnight to get the break. And this is a gradual, systemic approach to get penetration and from there. So
yeah, but we don't have to win all of that with the nature of what we know. It's a very tangible segment. We've put numbers out. I mentioned the Exxon product demonstration that we, and as part of those conversations, they guided on their review of the Exxon refinery, and they came up and just straight up said, we think that about 15% of the we installed in a refinery are good applications for a retrofit. Yeah. And we view that's given us the ability to look at the installed, which is how we come up with our market sizing numbers. Look at the number of burners installed, come up with, hey, over time here's the amount we expect you. Again, we come up with the different burners for application.
Yeah, and so let's end on this too. Just you talk about Exxon. Any chance of that coming back? I understand that was a cheaper share. It wasn't anything ClearSign Technologies. Is that a customer that coming back down the road? Feel like?
Oh, of course, yeah. No, we are talking to Exxon. I very much expect to get business with Exxon. Exxon huge company with multiple parts. I mean that one particular. I mean, just of that project was to demonstrate our and burn the test. We all of those requirements. The problem was that there was supposed to be demonstration, and due to the layoffs and situation with Exxon, installation opportunity went away, which was a big loss for that. That would have been great to get that installed. That particular heater, they just put a quality burn in that heater because it was easier. It's not good. But in terms of business with Exxon, you absolutely have to get business with Exxon, and we absolutely sell to them, talk to them as often as we can.
Yeah, no, it's good. Well, listen, I'm gonna wrap up there. I know we try and keep these to 35 minutes, and we're about running out of time. Obviously, Jim, thank you as always for your time, and everyone here. Yeah, for your time. And look, I know I've said this before. Is very excited. If you have questions, it's very about the business. Have questions in terms of market stuff that we can answer, please info@MDB. We're happy to opine with you. And just want to thank everyone. We'll be putting out a replay of this shortly. And thanks again for everyone's time. Thanks again, Jim.
Hey, Lou, and everyone, thank you very much. It's good talking to you.
All righty.